and scroll down to who owes you. So up top, we have the accounts receivable aging summary and then the accounts receivable aging detail. Let's look at this summary report. I'm going to right click on it and open that report. And let's take a look at it. So this one, why would this one be useful more? It's given this added level of information. It's breaking out how past due things are. This could also be found internally to see how past due things are. That's how we might sort things out to send out statements and whatnot. But I could also use this to determine if I want to make an allowance type of account or try to determine when an account is going to become undue. So let me explain that fairly quickly here. So I'm going to say this is as of, let's just make it 12/31/25. No, let's keep it at the same day. So I'm going to keep it at 02/05/25. So I have some time frame that's outstanding over here. So this is the total. It's still going to be breaking out by who owes us the money. The total still comes out to $5,281.52. That should tie out to what's on the balance sheet, $5,281.52. But it gives us this information by how past due it is. So the reason that could be useful is because when we think about what if I can't collect on the receivables? What if I have some deadbeats out there? There's always some deadbeats, right? So we can try to eliminate the deadbeats by having a higher threshold in terms of who we're going to do business with, which means we're going to lower our revenue typically because we're going to have less sales, but we're going to have less collection problems at the same time. Or the other strategy is we make sales easier, increase revenue, knowing that we're going to pick up more deadbeats, and then we're going to have to write off the accounts receivable for those losses where we did work for somebody and then they're not going to pay us, right? So the question is, well, how do I deal with those people that aren't going to pay us? Well, we could go into this report and look at the amounts that are past due. Now, we could do this internally as well. We could do this in our center over here. And as they become past due, we could then say, I need to write this off somehow, say to bad debt. If we use that method, that's going to be like what we call the direct method. Now, the problem with the direct method, however, from an accrual standpoint, is that it's a way that you can imagine the financial statements could be distorted. So, for example, if I go over to my balance sheet over here and you say, okay, accounts receivable is at $5,281. But let's say I know that I've been doing business with a lot of deadbeats, right? And so I think there's a fairly high amount of people that aren't going to pay us because that's just the strategy that we took on. We increased sales by selling to people. That means we're going to increase the number of deadbeats out there that we sold to that are never going to pay us. So that number's too high. We're overstating the accounts receivable. Now, if I wait till I write it off, then you can imagine people they can bloat their numbers by saying, okay, I'm going to make sales that aren't really sales because I'm making them to deadbeats. I bloat up the balance sheet account and then I write them off at some later point to bad debt. But under accrual accounting, we would say, no, you have to estimate the amount of receivables that you think are uncollectible. And that's going to be the allowance method. So a lot of small businesses don't deal with the allowance method. But if you get into larger businesses, you'd have to deal with kind of the allowance method possibly. There's a couple ways you can estimate how much of the accounts receivable you are not going to collect. One is by looking at the revenue and saying how much of the revenue you think is uncollectible. The other is to look at the accounts receivable. How much of the accounts receivable is uncollectible? Well, here's the subledger for accounts receivable. How can I determine who's not going to pay me? How can I determine who the deadbeats are? We don't know who the deadbeats are, right? But I do know with some level of accuracy that the more past due the outstanding balances are, then the more likely we're not going to get paid on them. And I can determine that to some degree by looking at past data. So if I've been in business for a while, I can say, I know what the trends are. These people haven't paid us for over 60 days past the due date. So it's likely we're not going to get paid. I can come up with some kind of estimate or percentage that's likely not going to pay us. I don't know who exactly is not going to pay us, but I know that someone's not going to pay us. And I can come up with my estimate there, and then I can make another account called allowance or for doubtful accounts, which would be a contra asset account, kind of like accumulated depreciation, reducing the assets for the amount that we estimate that's not going to pay us. The other side go into the income statement as bad debt expense at the point in time that we estimate it, not the point in time that we actually write someone off. And then when we write them off to the allowance for doubtful accounts instead of to accounts receivable. That way, we try to do the accrual thing, right? So you might use it in that purposes. That's why that's one reason this report might be more useful that you would use, even though you can, for internal purposes. So then you've got the detail report. We've got the collection report. We looked at these invoices.